What's up, guys? It's Cash Flow Cart, and today we are going to be going over the method that I use to hopefully outperform SCHD in the long run with no expense ratio. Okay, so let's get into it. First off, let's talk about the inspiration for this video, and I try to reply to all my comments on this channel. If you leave a comment, thank you for the support. And if I find it interesting enough, it might even inspire a video. So MJS28S said, using the holdings of a fund like SCHD, so he said like SCHD, but as the pre-screen filter. So essentially what this guy's doing is going through the holdings of SCHD and using that as kind of his stock picking universe or his watch list, and then using fast graphs as a means to refine the SCHD list for undervalued holdings is a pretty decent way to go. I've used fast graphs for years and gotten into some companies at some pretty awesome times. So again, this guy's lays out his methodology, in one sentence essentially. And he doesn't tell us what his holdings are, but I think it's important to note that, some of the best investing strategies could probably be laid out in one sentence. So, this guy being a like-minded investor as me, I kind of wanted to go through, what he means. So we go to all of Schwab's holdings. This is as of December 11th. Verizon's one of them, weighted at 4.5%. Broadcom, Amgen, AbbVie, Home Depot, Coke. Some of these are pretty quality. Some of these you probably haven't heard of. 3M. I mean, there's different risk with a lot of these companies on here, and some of those risks are priced in, and then other companies might be trading at a relative premium. So essentially what he's doing is he's going through these holdings and he's using some sort of preliminary screen to identify, okay, which of these holdings in Schwab's SCHD am I really interested in? And then, very important, he's looking for undervalued holdings. Now, this is such an overlooked point in investing. Everyone wants to know on the internet or, in the dividend investing community, what tickers, what stocks should I buy? Which ones do I need to make up my perfect dividend portfolio? But what's lost in this game oftentimes is what matters much more is going to be the valuation of the holdings. And you could have great holdings, but if you get in them at the wrong time, as a dividend investor, you're not going to be locking in an attractive starting yield. You're going to limit share price appreciation, therefore total return. So, this subscriber, he's got his list of stocks and he's looking for the holdings he wants. Not only that, he's looking for valuation. So just as, an example of how I would go about this and how I do personally go about this, in order to identify valuation, or I should say undervaluation, I like to use the forward price to cash flow. Okay, so what I do is I compare the forward price to cash flow of a company. I compare it to the 5-year average of that same company. So, I've picked two off this list today as an example. I mean, these are kind of cherry-picked examples, but I think it'll be good to use, relatable companies that can kind of drive this point home. First, we're going to observe AVGO, which is Broadcom, if you're unfamiliar with the ticker. Looking here at their price to cash flow on a forward basis, it's 19.5. What I like to do is compare, this current metric to the 5-year average of 14.5. And, if you're using Seeking Alpha, it'll even tell you the difference here, if it's positive or negative. If it's positive, essentially what that means is the company is trading at a higher valuation from a price to cash flow standpoint than it has on average over the course of the past 5 years. Okay, so for Broadcom, I look at this positive 33.74%, and that's saying it's overvalued by, almost 34%, if we're just using this metric. Does that make sense? How I can kind of identify, overvaluation in a company just by using one metric. And although Broadcom, might have some pretty impressive returns, and it's definitely one I would want to be a part of at the right price, maybe now isn't the best time for me to, start building a position. Maybe I should be a little more patient and look for kind of that best opportunity within this recent 5-year window. Hopefully that wasn't too wordy. And then on the flip side of it, we'll look at Pfizer. So again, price to free cash flow on a forward basis. Pfizer's is currently 10.6 is the ratio, whereas the average is 13.25. Okay? This here gives us a negative number, which could suggest, there's a 20% undervaluation in Pfizer right now, relative to how it's traded in the past 5 years. I don't want to oversimplify this. I know there's other factors involved, especially with Pfizer and COVID and everything. But, if you can kind of identify how you're going to determine if there's an undervaluation in a quality company and then focus on building those positions, you could definitely outperform SCHD. And, we'll talk about the why for that. So if you're just buying SCHD, without argument, you're going to get a mix of companies that are undervalued, good investments, and you're also going to get some companies that are overvalued and are probably going to come down a bit. Hopefully these undervalued companies will appreciate a little bit. But, with SCHD, at least in recent times, that's led to, kind of flat performance over the past, course of, SCHD has been flat for a while now. So if you are buying this stock, essentially you're expecting the market to go up over time, which, can be true depending on what time frame, we're looking at. Whereas the way I like to teach and the way this subscriber kind of is talking about here in this comment, if you're finding these undervalued quality companies, regardless of what the market does and how that impacts SCHD, essentially all you're doing is betting on these undervalued companies to kind of appreciate back to their fair value or appreciate back to the level, the valuation they've been trading at, in the recent 5-year window. Does that make sense? And then from there, as the market appreciates, as the economy betters, if it does, you're going to get even more upside and even more capital appreciation, as well as hopefully dividend growth if you're picking, the quality companies that we want to focus on. So yeah, I tried to explain this strategy as best I could. You don't need to use fast graphs. I personally don't use this. I'm unfamiliar with the software, but whatever sort of software works for you and resonates with you, that you can kind of identify undervaluation, that's going to work best. And, also note, you don't have to limit, your watch list to SCHD's holdings just because of the way that, these holdings are made up. You might miss out on, maybe some lower yielders that have great free cash flow and great prospects for future dividend growth. Okay, I hope this wasn't, too rushed. I hope you guys kind of understood that strategy. But let's go over, I guess, some pushbacks. A lot of people, their issue with this and maybe why they want to stick to ETF investing is because they feel that, you can't time the market. So a lot of investors, the reason why they might kind of call me out for this strategy, or, be kind of averse to stock picking in general, is because they feel that it's a form of timing the market. But, I guess my pushback with that idea is you're not really timing the market. Rather, you're just observing you're observing metrics. Okay. And, you're not necessarily betting on the stock price to shoot up right away. Like, this is not a trading in and out of a security per se. This is more just, okay, where can I best put my capital use? Where is, the best opportunity? So I guess that's my pushback here. And then, another thing people might kind of say with this strategy, why it's not going to work as well as SCHD, is, oh, what if I pick the wrong ones? And I guess my pushback to that is, it is going to happen. Okay. This investing game, specifically dividend investing, this is a long-term game, guys. There's going to be lessons. You're going to make mistakes. Obviously, you're not going to make mistakes if you're just buying an ETF and kind of just dollar cost averaging forever. But if we want to get to that outperformance, in terms of share price appreciation and that passive income stream through dividends, we're going to make mistakes. And, you might pick a wrong stock, or maybe not even a wrong stock. You might pick a stock that, you thought you had kind of the risk tolerance or stomach for, but turns out you don't. That's part of this game. What I would say is, cut the loss if you need to. If it's truly a situation where, you need to cut the loss, move on. Okay. Take your lesson and move on. Okay. So, it's going to happen. I know I've had personal examples, just to kind of share a personal example of me, I guess, picking the wrong stock for my risk tolerance. For sake of authenticity, guys, I really want to be authentic on this channel. I don't want to sit here and pose like I'm some perfect investor who never makes mistakes. That's not the case. So I'll share my target example. I guess you can see in September of 2022, I thought I had identified some undervaluation in the target stock. So, I started building a position in some of these dips. As time went on, I was very hesitant to continue buying. You'll see I don't make any more buys really, apart from, I guess, that first month I started building this position out. So this is already a red flag, okay? I'm not continuing to add to a position. So I clearly don't have the conviction I need to have in terms of target. I was worried about them lacking an economic moat, which is going to be one of the principles I teach on this channel. But then there was, some political issues that came out over the summer. I'm not going to get into it too much, but I realized I personally did not have the conviction for this one. I cut it at a loss. Let's see. I probably took, we'll call it a $30 a share loss, so that was, I guess, a little discouraging, but I took my lesson. I realized, as an investor, how important it is for me to see, an economic moat within a company. So I just wanted to include this example to show you guys this game takes time. Mistakes are made. Luckily this was not some life-changing sum of money, but it was an important lesson that I learned. And then one other pushback to this kind of stock picking based on, quality metrics and identifying undervaluation. One other pushback is going to be, okay, what about diversification? And here's my answer to this. Anytime I'm worried about, oh, am I diversified enough right now? What's going to happen? I personally have 8 positions in my dividend portfolio right now. I've revealed them in other videos, but I'll tell you kind of my take on diversification. I like to look at something like this, which is a chart that shows the S&P 500 sector performance. And the great thing about this looks a little chaotic there. The great thing about looking at a chart like this is it helps us realize as investors, every year there's different sectors that outperform. There's different opportunities, for sectors that have underperformed the broader market. And essentially what this is going to do is every year, every couple of years, there's going to be kind of this rotation of sectors that are more in favor and more out of favor. And that's going to allow you, organically to build your diversification, to build your portfolio over time. So, if you're a dividend investor, guys, you probably understand this is not a one-time thing. This is a longer-term commitment. So, I trust that as the market, goes through different cycles and different sectors become attractive, I'm going to get proper diversification. Okay. So I hope that answers that, guys. Keep the long-term goals in mind. If you have to write down your goals, whatever it is, and that segues nicely, saw this comment and made me smile. This guy said, getting closer to my second goal of 100 a month or so. A second goal of 100 a month. So proud. Hope you guys are hitting milestones and reaching goals, guys. Everyone in this community, I just want to say congratulations. I hope you guys are doing well, continuing to stay committed, continuing to look for great stocks, staying in love with this game. And with that being said, guys, I'm Cashflow Cart. If you want to subscribe, that'd be awesome. I'll see you on Mondays and Thursdays. I have content coming out. Everyone take care and have a great rest of your day.